in futures, it took me 4 years to get to break even success. So that means 3 years of losses. Each year, the losses were less, and I understood more. And it's sort of like, I don't know, doing Sudoku or crossword puzzles or other types of mental puzzles where you realize that when you do your first one, you're really trying to concentrate and it seems awfully difficult. And now if I do a Sudoku, I'm doing like devilish level or fiendish level or whatever. I'm way, way advanced. I've got all sorts of mathematical tricks I throw at it, and it makes it a little bit more easy to get through a Sudoku. And it almost becomes boring now, and I hardly ever do them anymore because it's just, there's not a challenge. The markets never, ever stop providing challenges.
Welcome to the Alpha Mind podcast with me, Stephen Goldstein, and my co-host Mark Randall, where we discuss matters related to trading psychology, trading behaviour, trading mindset, and so much more. Tom Basso was featured in Jack Schwager's second Market Wizards book, The New Market Wizards, written back in 1992. Tom is called Mr Serenity by Jack in his chapter. In the introduction to the interview with Tom, Jack made a point of saying, although Tom's results are significantly better than the industry average, they were hardly extraordinary. And yet, Jack says, in an important sense, Basso is perhaps the most successful trader I have ever interviewed. This success, Jack Schwager referred to, stemmed from Tom's ability to make money and yet remain calm, centred and completely balanced, living the life he wanted to live and doing the things he wanted to do without it being dictated to by the market or his ego's response to the market. Now, as you will hear in this interview, very little has changed. Tom has achieved extraordinary success, both financially and in the way he has lived his life. And if we're honest, trying to get both of these to happen together is an extraordinary feat. Now, you will enjoy this interview, and you will learn so much that is important to consider when taking and managing risk, but also when managing yourself. Listeners, we bring you Tom Basso, Mr Serenity. But before we do, a quick word from our sponsors. We would like to thank our podcast partners TradeStation Global and the Society of Technical Analysts. TradeStation Global is a multi-asset trading platform with access to international markets. Trade stocks, forex futures and micro e-mini futures from one account. Leverage professional grade tools like Radar Screen, The Matrix and Easy Language, an intuitive coding language for traders. And with TradeStation Global, there are no hidden price spreads, just transparent, low commissions. To find out more and open an account, visit tradestationinternational.com/alphamind or see the link in the episode description. TradeStation International Limited is authorised and regulated by the Financial Conduct Authority in the UK and acts as an introducing broker to Interactive Brokers UK Limited. The firm does not provide investment advice or trading recommendations. Investment and trading involves risk, including possible loss of principal. At present, the TradeStation Global product is not available to EU residents. The Society of Technical Analysts, the STA, are another long-established organisation with a great reputation. They are a member-led and not-for-profit body who have been providing world-beating education to the trading and investment community for over 5 decades and serve the needs of their members by providing outstanding online talks and webinars, regular newsletters, education, diplomas and continued professional development programs. Their home study course has been created by many of the world's leading minds in technical analysis and provides learning of a depth and breadth that is unparalleled in the trading and investing world. Listeners to the Alpha Mind podcast can obtain a 10% discount on the cost of the STA home study course. Visit alpha-mind.net and go to the sponsor section of our page to find out how to obtain this. Now on with this week's podcast. Listeners, we bring you Tom Basso, Mr Serenity.
Tom, engineer, musician, golfer, ex-pit trader. Hey, grey-haired ex-pit traders still live. Yeah, we're still alive out there. Puzzle solver, wizard. So
yeah, I never was on the pit except as a tourist.
Oh,
so
well, there you go.
Let's change that. I've always been an off-floor trader, and I think my engineering background led to that. In that, I think on the pit, it's helpful to have a very robust voice, and I think my voice is a little too soft for the pit. And I also value my ability to use automation to enhance what I do. And the pit traders, until they got the remotes that they used, were, I think, handicapped a bit in one way. And of course, they had a benefit in the other way. They could see the actual prices and who was doing what. In the negative side of that is you get sucked into all of that too. So psychologically, I think, well, I was warning pit traders back in the 80s. I was doing speeches at the Chicago Mercantile Exchange, trying to describe to pit traders what it's like to be in Scottsdale, Arizona, trading something that's in the pit at Chicago. And so, no, I never was on a pit except as a tourist. I actually went down there and they had some kind of a pit game during one of the conferences, and I participated. I had no clue what I was doing.
Well, that sounds familiar, because we had no clue either. So I think you're in familiar territory. Excellent. Well, and I think I wanted to start off with not the familiar question about, hey, tell us about your bio and everything. I wanted to, I'm sure you get asked that 1,000 times, right? I wanted to start off with a different type of question, which was that, okay, so Jack Schwager, post Market Wizards, then created New Market Wizards. We had Bill Eckhart, Linda Raschke, and yourself, Tom Basso, in the book. And my question to you is, why did Jack choose Tom? What was it about Tom that he was picking up upon? Was it process? What were you doing differently?
There was an interesting story. That's an interesting story in itself. I was at a Tharp Institute, Van Tharp Institute, who's no longer with us, but the Institute lives on, that specializes in a lot of the mental side of trading. And I was helping out Van be what he called a model trader. So I was somebody that traders trying to learn how to trade could come to me and ask questions, and I would try to tell them what I do, give them some suggestions to try to help them move their trading process along and get better at what they do. And I would go out for a weekend, Friday, Saturday, Sunday, typically. All Sunday afternoon would be questions to Tom. So it was fairly exhausting. It's like being interrogated for about 3-4 hours. During Friday and Saturday, though, Jack was invited by Van to come to this same seminar, and it was being held, I think, in Newark, New Jersey or someplace. It was close to the airport. It was easy for everybody to get to, but it was not a great area at all. And we're in some little motel thing and in a conference room and doing this. Well, every time we'd go to break, Jack, who is a sort of a well-known superstar in the industry, would have a collection of people around him asking questions about his various books and who he interviewed and all these different things. And I would have this, circle around me, peppering me with questions about trading. And I think Jack noted that. And round about Saturday, he actually started paying attention and listening. We were close enough that he could hear some of the questions that were being asked. He could hear some of the answers I was giving while he was dealing with his little fan group around him. And by Sunday morning, he came up on break and he said, Tom, if you don't have anything to do for lunch, I would love to interview you. I don't know if you know this. I'm coming up with a new Market Wizards book, and you say some very interesting things. And I don't guarantee that you would be in the book, but it'd be fun to interview you and pick your brain a bit. I said, sure. So we went to lunch together, and that started the interview. We were nowhere near done with the interview. So he was panicking, and I'm looking at my watch and saying, I got to go back and answer questions all afternoon. We got to start walking back, or I'm going to be late for my session where everybody's expecting to ask me questions. So, and it's no problem. Just call me up and in my office, and we'll block off some time. You can interview me as long as you want. So he said, okay. And he did exactly that, did the interview. And he said, he got done with it. And he said, wow, I really enjoyed talking to you. I sure hope my publisher wants to put this into the book, because it's just very different than a lot of the other ones. And I said, well, no worries either way. So he sends me, his process is interesting. He shoots down a pot of coffee and gets caffeinated, and he spends half the night transcribing in terms what the interview was about. And then he has somebody type it up. Then he sends it to the trader to get approval. And so I get a FedEx package one day. It comes in at around 11 o'clock in the morning. I go to lunch and I read this interview during lunch. I call him the same, like right away. And I say, Jack, I read through the thing. Do you have a copy of it in front of you? He says, sure. I said, on page 8, you misspelled the word, whatever it was. I can't even remember. He said, fine. What else? I said, nothing. You pretty much captured our conversation perfectly. You probably said a few things better than I said them myself, but you captured exactly what the answer was. And that's all fine. I don't have any problems with the whole chapter. Big pregnant pause. Tom, you have no comments whatsoever. No, I think you did a good job of capturing what I said. Another pause. He says, this was the easiest chapter I've ever written in both books. It just flowed out of me. It was so logically laid out. Your answers were easy to understand. It was crazy. I really hope the publisher puts this in there because it's different. And so when I get a copy of my personal book, he signs it. To the trader, I would most aspire to live my life like Jack. And he's become a friend. I love him. I think he's a brilliant guy. A little too much coffee probably for me. I'm more of a decaf guy, but he's a great guy. And we've kept in touch distantly over the years. It's been a fun meeting him and talking to him. And he's kind of brilliant in his own way.
Yeah. Wonderful. And you mentioned there that he was picking up on things that you were answering things in a different way to others. What do you mean by that?
Yeah, I think a lot of traders have this, I don't know, this fear that somebody else is going to find out what they're doing and somehow destroy it or whatever. That sharing good trading concepts somehow is detrimental to their own success. And I feel just the opposite. Sharing answers, let me qualify that. Nobody out there, you or any of your listeners, should be trying to trade exactly like I trade, because you're not me. Nor should I trade like you, because we have different amounts of capital we're trading. We have different expertise, maybe in math and computers. We have different contacts that we know. We have different markets that we know more about than other markets. And so it's hard for me to understand why anybody out there as a trader would be trying to copy anybody, because everybody's different. So if you just start with that foundation and then realize that a good trading principle, like having a trigger to get your buy and sell to go off, or to manage your position size, or to manage your brain and all the different things that can go wrong there, that's universal. It makes no difference what the details of that is. You can use a moving average. You can use a point and figure breakout. You can use Keltner bands or Bollinger bands or, Dungeon channels, or any number of 100 different indicators you could find on investopedia.com for triggering your action. You can use Tharp's book on position sizing is so big you could use it as a doorstop. It is massive. It covers everything you ever wanted to know and then some about position sizing. My position sizing book is not a doorstop and just focuses on what I do as a suggestion to people and keeps it more simple. The mental side, I've talked about that a lot. I think that's more important. And I think some of the guys like Van in the old days would say that that's the most important part of trading, because if you don't have your head screwed on straight and you understand what the market is trying to get you to do and be able to be aware of that and fight it and be your own person, I think you're gonna fall into a lot of pitfalls that are not going to help your process. And that's more important than I think all the other parts of trading. If you don't have your head screwed on straight, you're lost. And so I think that's universal, and that's what I try to talk about with people. And I think it's very helpful to a lot of traders, and they realize I'm not trying to get them to do what I'm doing. In fact, I'm encouraging them not to do that. But I'm giving them the reason why. And I think that just makes sense to me.
Lovely. I think, and perhaps a reflection that I think Jack dubbed you Mr Serenity, right? Gives you a bit of a clue that you've kind of worked that out. And I know that Steve's gagging to ask this question about, but it's not just been an easy journey, right? I mean, we know that there's, it's kind of like the worst ever thing to be doing if you want an easy journey, because it's so much to deal with. Perhaps you can go into that story about, there must have been times when you kind of thought, okay, things are difficult, but you got through it. So how did you get through these things?
Well, in my case, it was, I guess I almost got so busy, I almost couldn't absorb how difficult it was. I didn't have time to sit back and say to myself, poor Tom, and kick myself for going down this road. I kept making progress. And even if it was a year where in futures, it took me 4 years to get to break even success. So that means 3 years of losses. Each year, the losses were less, and I understood more. And it's sort of like, I don't know, doing Sudoku or crossword puzzles or other types of mental puzzles, where you realize that when you do your first one, you're really trying to concentrate and it seems awfully difficult. And now if I do a Sudoku, I'm doing like devilish level or fiendish level or whatever. I'm way, way advanced. I've got all sorts of mathematical tricks I throw at it, and it makes it a little bit more easy to get through a Sudoku. And it almost becomes boring now, and I hardly ever do them anymore because it's just, there's not a challenge. The markets never, ever stop providing challenges. So it's sort of this puzzle that I realized in my 20s that I could go after and have a puzzle that I could keep me mentally active the rest of my life, however long my life is. I will never, ever master trading in the markets. I may be ahead of some other people, and a lot of people view me as a trader. I view myself as a husband, a golfer, a guy that does dinner every now and again, a guy who needs to bottle the batch of wine I just fermented in my basement over here, the next room over, a guy who likes to travel, and who also trades our portfolios. It's not, I don't label myself as a trader. I label myself as a guy that does a lot of things. And I think it took me probably a little bit closer to maybe 10 to 12, 15 years in there to try to get my own psyche to the point where I realized that that's what I wanted to be long term, that I didn't want to be a trader. I wanted to just have trading be something I could do to manage my idle cash and to then free up my day so that I could do a lot of other things that are very interesting, singing, dancing, whatever. I met my wife at dance lessons. So, I mean, I'm pretty accomplished in a couple different types of steps, and we're going dancing this next Saturday night, actually, at a big 25th anniversary masquerade ball, and we'll have a blast. And I think a lot of traders that I talk to are, God, they send me a direct message or something on Twitter or Facebook, and they talk about their process they go through before the markets open. Well, markets open here at 6:30. I'm barely having a cup of decaf by 6:30. I don't even get down to the office till 8 o'clock. The markets have been open an hour and a half, and I don't even know what's going on. I might check on my phone briefly and see if there's anything else that I've got to do that day. But I'm totally relaxed about the process that I go through. It takes me about an hour now, trying to move that down to about 20 minutes in the future here with some automation that's coming online, hopefully any day. And, I'll free up more time to be able to enjoy life.
Wow, that's a wonderful outlook. Um, there's a few things you said there which really jumped out at me. There was a lot there actually, but I don't think we've got time to go into all of them. I mean, you almost seem to have this very relaxed way about you. You know, I can see it because we can see you visually, and also the way you're talking, the way you reflect about your trading. You said something really interesting about it took you 3 or 4 years to break even on your trading. Now, you said that in a way that, were you thinking like that at the time? Or were you thinking, how am I ever going to make a go of this? You know, a lot of people struggle with this idea of, they want to be profitable instantly. They want to be profitable in day one. They want we joke about it, but they want their Lamborghini at the end of the second year. And a lot of people, in my opinion, get fooled into thinking that trading is going to pay out just like a cash machine. When it's incredible hard work and it's a deep skill that takes many years to learn. What was your thinking at the time when you were going through that?
I think I viewed the markets and trading in general as a puzzle. I knew I needed, as an engineer, some backup rainy day money in case my firm laid me off, went through a recession, didn't need engineers anymore. So that was my kind of impetus to get going and to start saving money. And I did save enough to open a stock portfolio and later on a futures portfolio. And I was fortunate, timing wise, I freely admit it. Coming out of school at the end of '74, there was a 50% down bear market in the United States in the S&P 500. And so the 75, 6 was pretty good periods. So my forcing a lot of money into my account and dealing with stocks had the wind at its back. That made me enough money to be able to peel off $5,000 and open a futures account. I had no idea what I was doing in futures. I did not even understand how my first futures trade in corn lost me $600. I couldn't even figure out the math. But I decided, hey, this is pretty interesting because you can go long or short something like corn. And what I was worried about is too many people out there I see on especially Twitter, and I get questions and all that, are one-dimensionally stock market oriented. And I don't care whether it's stock market in UK or stock market in US. Anymore, with the computers around the world and the internet, it seems like New York goes down, we open up Hong Kong down, we open up Tokyo down, we open up Germany down, UK's down, then we're back to New York and we start all over again. The whole world is pretty much tied together anymore, and you can't get the diversification by going off and, say, as a U.S. citizen, going and buying some of the footsies. Back in the day, maybe in the 70s and 60s, maybe there was some diversification effect. There's a lot less now. The correlations of world stock markets have been climbing for the last 5 decades, probably. And so therefore, you have to look for other places. And I knew that futures had the ability to go long and short with equal ease. There was no uptick rule, which we had back in the day. All of us here are gray-haired or lack of hair. And I'm getting a lot less here. This is getting thin. But if we go back to the 60s and 70s, 60s before computers, really, PC came out in 1980, roughly, the IBM personal computer. So you're talking 10 million shares a day in the New York Stock Exchange was an awesome day. Break out the champagne. And nowadays, the SPY, the Standard & Poor's 500 Index ETF, trades 200 million all by itself. And you trade over 1 billion shares a day. And the volume goes all around the globe to spread the volume and spread the capacity. But futures, if corn's going down and you're short corn and you're making money, that can offset losses that potentially you're suffering maybe today, like with the stock market down over in the US today. You can be making profit in one place, losing it in the other. You're enjoying the ride. That's the concept. And so I knew that, and I knew the puzzle had to be solved. So as long as I was making progress and I kept track of every trade, and I tried to ask myself on a losing trade, what was it about that trade that I didn't like? Was it my own mental processes that caused me to jump early or take profit too quickly or not follow my stops or not put my stops in correctly or transmit something wrong? And I just would take notes and analyze it. And then I would say, okay, as an engineer, here's a problem. You've identified problems. How can you address the process so that that gets better and better and better and better? And every year it did. So I just kept trying to solve the puzzle and eventually did for me. And then eventually ended up having people with my success, and people could see I was doing a custom home in the woods and other people were buying a track house in town. And people would ask me, well, how'd you get the money to do that on an engineer salary? I went, well, I've been in the stock market and I also trade futures oh, how do you do that? They talk to me about it and then they want me to manage their money. And so little by little, I ended up getting dragged into the money management business by friends and relatives and people that wanted my expertise. And then one thing led to another, and all of a sudden we got a money management firm that's making money. I go full time. We end up getting heavily into futures later on in FX trading, and closed at the peak. I was at 600 million, made really good money being a money manager, but it got to a point where, why am I doing this? Another $1 million does not change my life whatsoever. It's just another, zero or whatever on the balance that I've got to trade every day with my process. So it doesn't change a thing I do. The orders get a little larger. That'd be it. And so I decided there's a lot more to life at 51 than sitting by a computer and trying to convince clients that I know what I'm doing. So I just closed it all down. I gave clients about a 4-month notice, 3-month notice maybe, and told them that as of this date, we will no longer be managing your money. And I terminated all the contracts.
That's interesting, because for the second interview in a row, we have a trader who did exactly the same thing, who started managing money and then found it unenjoyable, lost their interest in the job a little bit, having to deal with people and their I'm not sure if you call it their concerns, their anxieties.
Mm-hmm.
And then just thought, I didn't sign up for this. I'm much happier just trading my own money.
I'll give you, this is a mental side, and you wanted to talk a little bit about the mental side of trading. I will submit that clients, because they have the ability to give you money to manage or to take it away, have the ability to force their lack of ability to control their own mental side and anxieties and lack of self-esteem and just all sorts of mental issues that they might have. They force that on the money manager, or at least they try to. A good money manager tries to understand that they have those anxieties and tries to deal with them and explain how they should be looking at situations. But in my case, I found myself unable to convince most clients to think like I think. And even though I was conservative and being, I think, very, very prudent with people's capital, and I was trading my own money the same way I was trading theirs. In the final fund that I shut down, Market Math, I was the largest client inside the fund. So if you buy that fund, your money's sitting right next to mine. We're getting exactly the same return to the second decimal point. And but what I found happening is the coming and going, the convincing of clients, going to clients and trying to convince them that what I was doing made a lot of sense and had a lower return perhaps sometimes than the flashy track record that would get, that would lure a lot of clients. only to find that flashy track record turns into a big drawdown and they lost a lot of money. And then they don't have the money to give me anymore. So I'm still not a candidate. And so plodding along and being somewhat Mr. Serenity is not attractive to raising a lot of capital. And what I found happening was I spending a lot of time trying to help clients understand how they should think and how they should deal with the concept of hiring a money manager. And I even wrote a book called Panic Proof Investing that was dedicated to that. And I gave every client coming in the door a copy of that. And I could tell from some of their questions, they either didn't read it or they didn't understand it or didn't ignore it or whatever. It didn't do any good whatsoever. And I got to the point where when somebody asks you the same question like 3 years in a row at the end of the year, and you make the same answer, it's not very challenging anymore, and it's not a lot of fun. So I thought I got to be doing something else that'd be more fun than this. And like I said, I didn't need the money, so I thought, well, what's the point of why am I doing this? and that gave me the ability to go off and take dance lessons, meet my wife, do all sorts of things, sing karaoke. I love doing that. I'm in 2 different choral groups now. I sing in a church choir and I sing in a choral group that raises money for charity. And I'm a bass, a basso is the Latin term for in music for a bass, and I am a bass, as you might tell. And so I just do a lot of things. Every day is different now. I have a lot of things I do that are just fun, and I've been doing it now. I've been retired since 2003. So we're getting to be 18 years into retirement now. And somewhere along the way, the enjoy the ride.world thing, with me signing off my tweets with enjoy the ride, just trying to encourage traders to pull back from the profits and losses and just enjoy the process, to try to be helpful to people. That stuck. And now I'm kind of tagged with that little saying, I guess, and people end messages to me with ETR.
Okay, so could you tell us a bit more about that? Because that feels important to you.
Yeah, well, I think a lot of people are results oriented. You're taught business schools and whatever that, you got to set a goal and you got to meet your goal and all that stuff. Well, trading's a little different in that. I just had a question as recently as last night that I answered before I came on with you guys that talked about what would be my objective for my return per week. Should it be plus 0.5% or minus 0.5% is bad? And all that, very results oriented question. And I answered it this way. I said, I don't even look at my returns per week. What I do is I ask myself, and I gave the example that I'm in right now. A couple days ago, I got my indicator set up to do a 7-day option or 8-day option, I forget, as a credit spread and put options because the market was very oversold and it was going sideways. So I thought I'm going to sell a credit spread on puts. If the market goes up, I make all that money. I have a limited loss if the market continues down. So guess what? The market continued down. I'm losing on that position. Was the strategy flawed? No, it's a strategy to pick up profits during a sideways period, and we are in a down period. So it should not have an easy time making money. It should have a tendency to lose. Why I am not concerned is I'm short metals, I'm short energy, I am having a huge day because other stuff that's trend following has picked up all the downside signals and pushed my portfolio leaning short. So this one little part, I don't want to abandon it because it's there for the purpose of making me money during sideways periods. And there will be a sideways period in the future. And it will coin money every week and have an easy time of it. Meanwhile, I am making a bunch of money someplace else. I run 9 strategies simultaneously. So it's pretty easy to see that each of them, like my hedge strategy, just went on this morning. I'm now officially to the downside on my longs are down to 55% now invested long. And the long aspect of that is hedged using in this case, S&P futures. So what's the purpose of the hedge? It only goes on during down markets. It sits in cash and does nothing during up markets or sideways markets, hopefully. So it has its objective. The trend following futures has its objective. The sector timing of the ETFs has its objective. And each is going to make money in different types of markets. And by blending it all together, it gives me that sort of all-weather, I can make money in any direction and any sideways or whatever. I can kind of try to hold my own no matter what happens. And that is my puzzle that I try to solve. And it may be a little bit advanced level for the average trader, but it's not something you can't get to eventually, especially given all the automation we have today in the world. You just have to start the process and grind it out one day at a time and try to figure out little pieces of it, keep adding to what you're doing to get it all together.
We'll return to the podcast shortly. The Alpha Mind podcast is sponsored by TradeStation Global and the Society of Technical Analysts, the STA. TradeStation Global is a multi-asset trading platform with access to international markets where you can trade a range of instruments from one account and leverage professional-grade tools like Radar Screen, The Matrix, and Easy Language. And with TradeStation Global, there are no hidden price spreads, just transparent, low commissions. To find out more and to open an account, visit tradestation-international.com/alphamind or go to our website alpha-mind.net or see the link in the episode description. The Society of Technical Analysts, the STA, provide world-beating technical analysis education programs and offer outstanding membership services. Alpha Mind podcast listeners can obtain a 10% discount on the cost of their excellent home study course and home study course with a diploma package. To find out more about this offer, go to our website alpha-mind.net or see the link in the episode description. Now back to the podcast. Okay, I'm going to hand over to Mark in a minute, but I've got a question about that because we're always banging on about having a process orientation. And by the way, just you mentioned Van Tharp before. It was very sad to hear of his passing.
I was saddened.
Yeah, we think we may have done one of the last interviews with him. He was on the podcast. We were a little bit concerned about his health at the time. We said afterwards we didn't know he was ill or anything. So it was real sad, but he made an amazing contribution to this field.
He did.
So just want to kind of say that about him. And I know one of the things he talked about was this process orientation. It's one of the things that we've talked about and we try and bang on about in our own coaching with clients. But it just seems always to be running against this results orientation philosophy, which it feels like 99% of people out there have. Just wondered if you have a view on why that is, if you've got any ideas, or where does this results orientation come from?
I think it's sort of a human being trying to force results into your activities and to be paid off right away for your efforts, when in fact trading is a bit more, the market does whatever it wants to do. You don't have any control over it whatsoever. And you got to go along for the ride, as the shirt says. I don't view myself as having any whatsoever ability to predict the market or to try to force myself to make 0.5% a week. It's not possible in my mind. What I can do is say that the markets will go up, they'll go down, and they'll go sideways. And I need to have ways of dealing with all of those different conditions if I hope to be anywhere near a consistent performer over year after year after year. And I'm retired. I don't need, I don't need 100% return, even though I made over 100% in 2000. That was by complete COVID luck. Caught all the downsides, caught all the upsides. Trade the same way then that I'm trading now.
2020.
Roughly the same mix of markets. I did drop one market out after 2020, but most of the markets I trade now are roughly the same strategy, same risk levels. It's just that year had violent market movement, and what I do caught it. So you could say that was luck, but it was also me strategizing that if a market moves, this is what I do to capture it, and I captured it. So I ended up with a great return. I'm not having this year nearly the year that I had in 2020, but I'm positive. And a lot of people are negative because they just trade the stock market. And I think that's a flaw. So I like time diversification. I like market diversification. I like strategy diversification. And I like everything focused on what it needs to do its job in conjunction with all the other strategies. And to kind of, a friend of mine, Lawrence Bensdorp, who you should interview as well. He's over in Portugal. So the time zone change would be a little easier on you guys.
We've got him on our. People have mentioned that we should get him on, so I've actually got him on a list to call.
Yeah, he speaks 6 languages, one of which is English. So you're in luck. But he's a good friend these days, and he calls it filling the potholes in your track record. So if you can imagine the graph going up the page, and there's all these drawdowns, those are the potholes in your track record. By having strategies that attempt to fill those potholes, I just love the visual, because what you're doing is combining, like your trend following model loses money during sideways markets. So how about if we do credit spreads during sideways markets? Those will do real well. You're helping to fill the pothole. And it's just a good visual for me. And it gives me that kind of, until I have no more potholes, I have a challenge for the rest of my life to keep thinking and keep saying, how could I do better and get that pothole to be minimized somehow? And it's a great mental process to just keep the challenge in front of me. And that's why I have 9 strategies now. I've just tried to fill various potholes that I've observed, and I've tried to ask myself, how might I fill them?
Magical stuff. When I listened to you, when we asked that question about what you managing you during difficult times. I mean, and big drawdowns. And I think that the message is that, variety is the spice of life. It is the variety in your life that, was supporting you in your trading, be able to do other things and being curious, I guess, and taking on new skills was kind of therapy. I want to use the word in the right sort of way, but it sounds like it was very, very important for you.
Well, one of the reasons I took up golf so heavily over my lifetime is it sort of like trading is a never-ending brain tease. You never can shoot a perfect round of golf. Yeah. You'll never master it. You'll never, a perfect round of golf, according to some of the golf psychologists out there, would be somewhere in the neighborhood of 55 or 54. You would have to be flawless in every aspect of your game, make every putt, and it is theoretically possible, but it's not likely that anybody is going to shoot that anytime soon, because one mistake and you're at a 55, and it's easy for a human being to make the one mistake. So trading, golf is sort of that thing. And when I'm playing golf, I don't think of trading whatsoever. I'm worried about the next shot. I'm trying to analyze, what did I do on the last one that I need to adjust, or, did I hit that putt too fast or too soft, or what happened there, and get better and better. And, I'm a fairly accomplished golfer. I'm never going to be a professional or anything. I'm never going to win the club championship, probably even, unless everybody else just doesn't show up, which happened to me one year, actually. I got on the first tee and everybody had canceled out of that particular flight of the championship. And they said they could award the trophy to me, or I could play for the 2 days. I said, well, I've already paid for it. I'll play for the 2 days. But then I got a trophy sitting over here that I laugh at every now and again, because the reason I won it is nobody else showed up. If there's competition, it's tough. I'm like a 15, 14 handicap now. With my older age. I'm 70 years old, and it's probably not going to get better. But that's exactly what I did golf for, is a distraction from trading. It gets you away from it. It completely captures your brain. If you do the same thing with other endeavors, like really try to analyze, what is dancing all about? How do I put a smile on my wife's face when I twirl her around at a certain moment that she doesn't expect? And how is cooking? How do I make a simple sauce or a roux to start a sauce? And you take cooking classes, and it's fun, and you get to eat the results. What's bad? It's kind of good. The wine, I make wine that everybody I serve it to loves. Um, it's sort of a Amarone, Italian wine. I'm Italian by background, so it fits my ancestry. But all these different things I do, I love to prune my own gardens. I've been to London and seen some of the British gardens. They're very formal and straight lines and everything. I like to do a natural garden, but have things in bloom throughout the year. And I think I've achieved that fairly well here at where I'm sitting today. Got a lot of gorgeous flowers everywhere. But to know how to do that, I went to 1 year of landscaping classes, pruning, yard maintenance in terms of grass maintenance. I know about the chemistry of soil now and all sorts of weird things. Most people would say, Tom, you're a little bit out there and that's a little nuts. But if you take a topic on and you try to say, I want to know everything about it, I can, within reason. Then you find yourself looking at if you hire a professional landscaper and they come in and hack your bushes all up and there's no blooms anywhere, and I know how to do it properly, it just drives me nuts. So I just go out, I grab a hand shear and go out. I'm done with trading for the day. I go out and start pruning. And it's very peaceful. You don't think of anything. You just kind of concentrate on the next cut. And it sort of is a meditative type of get away from the trading. Yeah. And I think it's very helpful.
Oh, indeed. I guess you could argue that all of that portfolio of stuff powers your trading moments when it comes to then applying yourself to trading. You got the energy for it, yeah. And then if it all falls to bits, well, you know how to unwind because you got a choice. Go cook, go golf, do some dancing. Sounds like a nice way of treating life, and work, and the balance of it is important, isn't it? Having balance.
Yeah, it is. I try not to make any one thing overwhelming. Lately, trying to get this book finished that I'm writing has been a bit of a project, and I'm kind of right at the end, so I want to push it over the edge. And it's required some late afternoons of sitting here working with charts and graphs and tables and trying to get the graphics finished. The writing is done. I'm just trying to get the pictures that go with the writing finished. And I think I'm up to like 26 out of 33.
Just going back to that variety stuff, and I guess for the audience of traders out there, get your head around stuff that's more than just one product. I think is the message, right? Be curious, and if you've got the futures account, I mean, if you've got absolutely everything on the planet you could be looking at. If you've got sort of raw technical skills. And I guess that's a question for you, actually. Of all the styles and all the methodology that you're looking at to create the signals that, that generate your strategy. I mean, is there any guidance you can give to people about, the sort of things that might be worth following that you've found successful over the years? No guarantees,
Probably the easiest thing to do, but maybe somewhat difficult to deal with mentally, would just be simple trend following. I just answered a question this morning. Somebody on LinkedIn asked me a question about how Standpoint, a mutual fund, which I'm the chairman of now in Scottsdale, Arizona, got through COVID with a down 20. I think the stock market went down in the US about 35% or something like that. And we were down like 8%. Well, how did we do that? Well, because 50% of the portfolio is sitting in 75 different global macro markets in 2 directions. They can go long or short any of them. And it turns out crude oil, spot crude oil, went negative for a day or two. Standpoint was short because the trend was down. If the trend is down, you're short. And what happened after that? COVID kind of wound down a little bit, or at least some of it did. And then the infusion of all the stimulus packages around the world and trying to fire up the economies. Stock market took off to the upside. So when the trend turns to up, you go long. So now you're long crude oil. It runs all the way up to like $100 a barrel, plus even with the Ukraine war. And so they ride that trend. So they made it in both directions. And yeah, the stock market was down during COVID, about 35%. But you got all these other things making money to offset some of those losses. And it's diversification. So trend following, to me, with a diversified portfolio, is probably one of the easiest ways to base load your performance. The hard part of it is, and most people will have a very difficult time with this as human beings, is that over my lifetime, I've probably been about 33% profitable on my trades and 67% unprofitable. About 2/3 of the time, when I put on a trade in trend following, I'm going to lose money. And I know that ahead of time because I've got a lifetime of statistics that tells me that. So I'm okay with that because I know that I've limited my losses. They're small. When I do get a profit, like a crude oil going from 100 to 0, I know I'm going to make a ton of money on that. So that's going to pay for a lot of those little losses. But for most people, it's another loss and another loss. And then sometimes it's not just 2 out of 3, it might be 5 out of 6. And you start questioning yourself, and that's normal statistics is easily able to get to that level. And you start questioning. And you shouldn't, because you know that markets are probably going to go one way or the other, up, down. And when they do, you want to be on that ride. And in the meanwhile, you just stay out of trouble. And it's hard to mentally put up with the larger number of losses, even though they're small. And so people struggle with that. And they keep wanting to be perfect. I see traders trying to design these strategies that have filters. We only trade when the Fed does this, and we only trade when the GDP is doing that. And then we got to have this set up on the charts, and then we got to have the breakout here, and that's when we buy. And then we wait for a pullback, and then we get in because the risk is lower and all this. But they can't get all that to happen. They never do a trade. They can't. All those things don't line up, but a few times in a lifetime. So I try to keep it really simple, very small parameters, jump on the trend, ride the trend, get out of it when it decides to go the other way, and reverse. Don't worry about it.
Keep it simple is such a lovely description for how to do this job well.
Yeah.
And whenever I've tried to overcomplicate, you were talking about trying to perfect things and trying to add filters. I've been through a few experiences in my life where I've tried to do that, and it never ends well. And yet, whenever I go back to keep it simple, start making money again.
Mm-hmm.
Exactly. It works.
How many people do you know that use, let's see, volume, economy, interest rates, all sorts of other indicators to try to predict what they're supposed to be doing in the stock market? When in reality, if you keep it really, really simple, the pit trader has it right. They're buying here, they're selling there, the price changes, they make a profit, end of story. Interest rates had nothing to do with that. Economy didn't have anything to do with that. It was as stupidly simple as possible. Buy low, sell high, or sell high, buy low. Pick up that difference. That's trading.
Well, I think there's a difference between trying to be right and trying to make money.
Exactly.
And a lot of people don't get that.
Exactly. You're right. There's lots of strategies that are less than 50% reliable that make tons of money.
Yeah.
And I run some of them. So
yeah, absolutely. Listen, Tom, I'm curious. You've got this Enjoy the Ride .world, which you're wearing the t-shirt of, and I love it. And already I've decided we're calling this episode Tom Basso Enjoy the Ride. Okay, because that you're standing there again. People can't see. You've got a smile on your face. You looked as relaxed as anything, and it's wonderful. There must have been times when you were trading, maybe in your early days, maybe certain experiences that knocked you out of your stride. What was it? Can you recall those times? And what did they feel like at the time? And how did you manage yourself through that?
Uh, Not well.
Yeah.
um, I learned lessons from it, but the famous silver trade that Jack talked about in my chapter with at the same time that the Hunts were trying to corner silver, I happened to be in on it long and started with about $130,000 futures portfolio at that point. And, somewhere in the middle of the trade, a couple months later, I'm sitting there looking at a $500,000 equity in my portfolio, thanks largely to silver. And I was good at that point. I was very disciplined. I had already learned my lessons to follow my strategy and hang on for dear life. And I watched the $500,000 go back to my stops, where I closed it out at around $250,000. So equity in the account. So I've gone from 130,000 to $250,000. And a lot of people will say, well, in the end, that's not so bad, is it? And I would say, yeah, but I was at a $500,000 and now I'm at $250,000. That's like a 50% down in my equity, and it's already part of my drawdown. And I was very, very nervous during the whole thing. And I asked myself, well, my mental side was really, really overly warped. I wouldn't want to go through life that way. I would never be trading today. I'd be in some kind of mental institute, or Alcoholics Anonymous or drug addict or whatever, because it's just too much stress for a human being to take on, seeing that going on every day. And so I asked myself, I looked at it, and I, mathematical engineer that I am, I said, I had X number of contracts during that move, and that was what the signal told me I needed to put on. That's what I put on, and then I held it for dear life all the way to the end. But that the market conditions changed a great deal throughout the trade. And in addition, the volatility, went nuts. My risk got super high. Why am I holding on each day throughout the trade the same amount of position that I put on initially? And that's where I got into all the ongoing position sizing algorithms that I put in the book that I did on position sizing. And it allowed me to also include volatility as a measurement, because if you think about lots of trends that happen, when they sort of start out, nobody cares. Like corn's breaking out. Some fundamentalist decides corn's going to go to the upside. So it breaks out. Up it goes a little bit. The trend followers start jumping on because they're getting breakouts. Other people are buying the pullbacks and keeping it from going south. So it kind of takes another run. Now it's starting to make the news. More people are jumping on. People that aren't in on it are missing it and are getting fear of missing out. So they're chasing it now. And corn's going nuts. Well, volatility started out slow and it got exciting at the end. Why not sort of at least measure volatility and keep control of your portfolio so it doesn't start going insane as market conditions constantly change? And I know there's this debate, guys like Jerry Parker and others always are anti-volatility targeting. And I don't know that I'm targeting so much as just making sure that my position sizes are, in terms of risk and in terms of volatility, at a level that I can tolerate as a trader. And I'm willing to accept whatever the market gives me within those levels. I am not willing to put my own psyche at risk to try to make a larger profit, knowing that I'm going to have a larger drawdown, larger volatility. It's going to try to intrude and cause me to try to change what I do or abandon what I do. I don't want to get into that. So I try to keep things smooth.
What's going through your head at those moments when your psyche is challenged? What is the feeling? What is the, is there an inner torment going on? Or, what does Tom Basso feel at those moments?
Well, when that happened way back, I guess it was in the 80s or something. I can't even remember now. It's been a long time. I was having a hard time concentrating on what I was doing all day because every time I would try to just, go and work on an engineering drawing or whatever the problem I was trying to solve at that moment, it kept going to, I wonder what silver's doing now. And it's, like limit up, limit down. It's going all over the place. So yeah, grabs your conscious mind, and It sort of focuses you on the minutia of what's happening with prices that moment, and it gets you to step away from the strategic thing of, hey, my account was 130 and now it's 250. Everything's okay. The strategy's moving up stops. We're doing exactly what we should be doing. And so the reason I added those features was to help me stay in that moment and stay in the strategic thinking mode all the time. And it helped. I can't say it didn't. And but I used it all through my Trendstat years. I still use it today.
So in a sense, what I'm sort of hearing from what you're saying there is that managing your psyche, managing your mental state, managing your own being was more advantageous in the long run than trying to create a than book a huge profit, but that could completely unbalance you.
Exactly. Because if you think about it in the end, how many track records have you seen out there that just, they're 20% a year for 10 years plus? But nobody sees that little 50% drawdown that was back in 1984 or whatever, that was part of the track record, because the way they plot it on linear graph, over here looks great, and down here, that's 50%, but you don't see it because it's too small on the chart. And what ends up happening is they buy it and off they go, and another 50% drawdown comes along, as you would expect it to, and they abandon it. So what good was doing that strategy in the first place? If you're going to get into something and abandon it, and there's a high probability that you will, then aren't you being very short-sighted by not doing something to help prevent you from abandoning it? And that's where I think a lot of traders, they view it as positive is good, negative is bad.
Yeah.
No, I view a good day as a day I followed my 9 strategies. And the markets will tell me whether I made money or not. It has nothing to do with good and bad. Good is I followed my strategies. Bad is something happened to disrupt me. The internet went down. I couldn't get stuff done. Communications went down somehow, or my broker platform is under repair and I can't get to it for another 2 hours or whatever, and I'm little off my normal stride because something else has intruded. But in a normal day, I want a good day to be just like the previous day, and just like 2020, and just like 2021, and just like 2022 and 23. Next year, I just want another year of doing roughly the same stuff. And I think that a lot of people live and die with one strategy, and when it's not working, or they think it's not working, it may be an upside strategy, but they're losing money because the stock market's going down, which is what you'd expect, but they are ready and willing to abandon that and go off and see if they can buy puts on the SPYs or something that would make money now, because they're obsessed with, they've got to make money every week or every day. And I think that that's a great recipe for just wandering around and trying everything under the sun and never letting anything do what it needs to do for you, because you'll abandon it before it hits its stride. So,
well, I just love the balance in the way you approach things. I'm almost tempted to almost, it's a new quote for Tom Basso to be using, is that the secret to trading is knowing how to make a great ragu.
Yeah. Okay, I can live with that.
Yeah, I can live with that. But there's a kind of a point to saying that, right? Because there are people out there that are in front of their screens for 12 hours, 13 hours a day, hoping that something goes right, and with a full process. And I think it's really kind of you to disclose the fact that you were only making money 33% of the time, and 67% was kind of, that's how it was. And you're a wizard, right? We know you're a wizard. And if that's what you're doing, people need to recognize that maybe that's normal, right? And they should just carry on working on their method and their process, but maybe just broaden what they're looking at. You know, as you rightly said, when you get stressed, you zone into the bid and offer and the depth and kind of forget everything else that's out there. So managing self and managing, you know, stress levels, and a lot of that is having this portfolio of the variety of the spice of life going on to kind of keep that balance, right? To allow you to have that energy around the process of trading. So I've significantly enjoyed the conversation because you've revealed that to an audience that's hungry, you know, for that type of information.
Think about that. Singing. What do you have to do? You have to going to vocal cords, right? And then this comes out of the fact that that doesn't sound like the same note that the piano is playing or whatever, or the karaoke track is doing. And so you adjust, your mind just quickly adjusts your voice, tightens it or whatever it has to do, the vocal cords, the tone comes up, and now you're on pitch. So you're increasing your awareness. Singing is an increasing your awareness exercise. Well, let's go back to trading then. Let's say you're aware that the markets are going against you today. You have a trend following model. You're long, but the stock market's caving in and you're getting close to your stops. And you're thinking, there's no way this isn't going to go through the stop. I might as well go ahead and short this thing right now and get ahead of it. Well, now you're not following your strategy. But if you're aware, you say, whoa, wait, Tom, that's not your strategy. Your strategy is to wait until that spot, put the stop on, go short. Don't worry about it, because it could just stop going down and turn around and go the other way. And then you're going to be golden. You don't jump in there and change your strategy on the fly. So awareness in trading becomes very critical in trying to feed discipline in trading, because if you're not aware that you're deviating from your plan, then it's hard to have discipline because you don't even know you're not doing what you're supposed to be doing. You're not aware. So things like singing and other exercises in life help you in your trading because they increase your awareness, they increase your self-esteem. I mean, let's face it, the markets can shred your self-esteem. If you don't have high self-esteem and it starts feeding you a series of losses, then now I'm a loser. Now I'm poor me. I don't know what I'm doing. I wish I knew as much as Tom Basso did. All this stuff, it's just self-esteem. Get books on it. Try to figure out ways of improving and tell yourself that I am me. I'm unique in the universe. There's nobody exactly like me. I have my own unique trading style. I don't care what other people do. I maybe listen to what other people do to get ideas, but they've got to be made into my own, and have that confidence that the markets can't destroy you, because the markets will try to push every button that you have, and it'll find every weakness in your psyche. And you've got to be able to say, no, I know what you're doing, market. I'm just going to ignore you and go on and do my thing. And so it's a lot of mental stuff happens away from the markets, and people that don't work on that just end up in this kind of rat, what do you call it, the little cycle thing where you're just going around in circles and you're not getting anywhere. And I think that's sad, because you're just into this stressful, potentially stressful, I like to say, because it's only stress if you allow it to be stress. Potential stressors can get to you, and you allow them to get to you. And then it just makes trading to the point where it makes you sick.
Yeah.
There's no reason for that. No logic behind it at all. But it happens frequently.
And it creeps up on you, doesn't it? I don't think, that's always the challenge here. When I've experienced that myself, when I've seen it in others, it almost creeps up unbeknownst to them, or certainly to me. And then suddenly you're in it and you can't see yourself in it. And the self-management is really getting yourself out of it.
And it's lack of awareness that you are in it.
Yeah.
And then the ability to pull back and use your self-esteem and your confidence and all that to say, no, I'm right on plan. I mean, like I said, if your indicators and your trading strategy should have you with a losing day today, but you followed your strategy, then that was a good day.
100%. 100%.
Maybe even more of a good day than a positive day, because a positive day is sort of easy to ignore an error that you made that ended up being a positive error. I don't ignore those positive errors. I ask, how did I make the positive error, and how do I keep that from happening again?
Yeah.
Thanks for the positive error. It looks great on the equity, but I want to squeeze that out. I don't want any more errors, period, positive or negative.
Yeah.
And so that's sort of where I'm at. I'm running a machine. I'm running a factory of data processing. I have data coming in, I'm processing it here, and I'm shipping it out. That's my business. And I don't view that as trading. I view it as running a data processing operation.
That's wonderful. That's wonderful. Listen, I'm conscious of the time. I'm going to hand back to Mark in a minute, but
Okay.
Where people are listening, where can they find out more about you? And I see that you do seminars, you've got books.
EnjoyTheRide.world is my retirement website. The reason I put that together was just to put everything Tom Basso in one place, so that when somebody asked me a question about how do you do your hedging, Tom, instead of answering it in 5 paragraphs, I just put the link to the hedging page at EnjoyTheRide.world and say, all your answers are here. And then they write back and say, thanks, that's exactly what I wanted. And it saves me a lot of time. That's why I did it. And the few things that I put on there, which would be some webinars that you can buy recordings of, and a video series, and a couple book recommendations, and all these different things, that brings in some revenues that pay for the website. And then I don't have to go into my pocket to run the website. And I try to just keep the website simple. It's not complicated. Right. And so that's one place. And then I have 45,000 Twitter followers now, and that's at Basso_Tom. And be careful, because there's about 8 imposters out there now. Everybody's adding an extra space on the end of Tom, or 2 M's for Tom, or 3 S's for Basso, or putting a 1 on the end of my name, and we block them as fast as we can. But Twitter is hopelessly stupid about stopping that. And I sure wish Elon would take over and clean that place up. I really detest the way it operates. But I'm also on Facebook at EnjoyTheRide.world. I'm on LinkedIn at Basso_Tom, I believe. And if you put in my name and search on it, you can find me on Parler, MeWe, Telegram, Truth Social, and I think that's it.
Okay, and that picture of you, which I've just got on the website, where you're sitting there holding a glass of wine, is that your wine?
If I have a glass of wine frequently, it's not my wine. Although I do have it every now and again when I serve it at a dinner where I invite other couples over. Frequently, when you go over someone else's house, it's nice to bring them something. And so I have my own label that I put together that has my wife on it in a gypsy costume, stomping plastic grapes, which you don't know in the picture, inside of a half a barrel of wine. So she's basically lifted her skirt up a little bit, showing a little leg, and smashing grapes. And we call it Brenda Zamorone. And then I give a little description about the wine and the year it was produced and all that. And I take it over as gifts, and it's always a popular item when I take it over to other people's houses when they invite us to dinner. So I use it more for gifts than I do myself. But I do pull it out sometimes when I know somebody who's allergic to sorbates. I don't use a lot of preservatives in my wine, so it doesn't age well, but it never sticks around long enough to age, so it's okay. It's usually gone within the year.
Brilliant. Well, listen, I'm going to hand you over to Mark, who's going to take us out.
Okay.
This has been great. It's been wonderful listening to you and
Yeah.
hearing your stories and your philosophy more than anything. I think you've developed a really strong philosophy that underscores what you do. That is, I'm sure, is the power behind your success.
Yeah.
Mark?
And this has been great fun, Tom, and just enlightening. I know you're going off now to just tune your long irons, and I'll leave you with a thought actually on golf. Then I'll put another important thought at the end of it. A 70-plus-year-old golfer that I met back decades ago, he was sort of like about a 4 handicap, and I just couldn't work out what he was doing until I then started to notice that he wasn't actually paying any attention to golf in between his shots because he was a bird watcher. And he was looking at the birds, he was spotting birds in the trees, looking at the types of trees. And he wasn't thinking about golf, but playing golf. And he had the smoothest swing you'd ever seen. But when you see someone of that age, 4 handicap, you start to realize that he just perfected the mental game and just wasn't distracted by golf. He took no practice shot. He just got up to the ball and hit the thing with no prejudgment. And I guess that there's some lessons there. But I wanted to go back on this thing about stress that you covered briefly, very kindly in this interview, is that, and some of the work that I do, we very, very often ask each other, how are you? Are you okay? But we almost never turn that question around and ask ourselves, am I okay? And that's something that we need if you're operating in this space.
Mm-hmm.
And then ask yourself, am I okay?
Mm-hmm. It's a good way to go. And if not, if you don't feel like you're okay, then try to ask yourself why, and get at the heart of why. And sometimes it's something that you can do with mental tricks or awareness, or I don't know. And I think that that's a critical thing for traders to realize, that they don't even realize they're not okay today. You see some comments on Twitter, they're beating themselves up over some trade they did.
Yeah.
Why'd you do the trade? And analyze why it became a loss, and why was the loss that you allowed it to be. Did you have your stops too far away? Did you have too large of a position size? What is the problem? And you usually, if you can dig down into the depths of it, there's usually a cause and perhaps a solution that's fairly easy to implement. And then you just have to kind of keep doing that every day, and quit with oh my God, this one's got to go. I'm going to double my position size on this one because I'm going to really get rich on this. Just pointless.
Wonderful. Great to have you on the show, Tom. We now give you permission to go hit some balls.
Thank you for listening today. We would like to thank our podcast sponsorship partners, TradeStation Global and the Society of Technical Analysts, the STA. You can find out more about our sponsors at our website, alpha-mind.net, or see the link in the episode description. TradeStation Global is a multi-asset trading platform with access to international markets where you can trade a range of instruments from one single account and leverage professional-grade trading tools. Visit tradestation-international.com/alpha-mind to know more. The Society of Technical Analysts, the STA, provide well-beaten technical analysis education programs. Alpha-Mind podcast listeners can obtain a 10% discount off the cost of their excellent home study course. We hope you enjoyed this episode. If you did, we'd appreciate it if you could leave a friendly review or provide a rating for the show on whichever podcast service you use. You can find out more about us at our website, alpha-mind.net. You can follow us on Twitter at AlphaMind101 and at AlphaMind102. And you can connect with me, Stephen Goldstein, and my co-host, Mark Randall, on LinkedIn. You can also follow us and can check back over some of our past episodes on the alphamindpodcast.com. We wish you the best of luck in the markets. Have a good week.